After hitting an all-time high in the spring, copper's been spiraling down nearly 20%. And our next guest believes that more pain could be on the way. Scott Pollan is president of Emergency Materials Services. Scott, welcome to Kitco.
Hi, Michael. Thank you for having me today.
Scott, there's been a lot of bullishness about copper. Goldman Sachs called it the new oil about 2 years ago. Energy transition and AI is supposed to be driving demand, yet the metal is barely up for the year. And you believe copper could be headed lower.
Yeah, I'm seeing things in the market that are leading the direction of downward price pressure. And in the near term, we could reach sub $4. And in the medium to near term, we could even see below $3.50 before the end of the year. I believe that Q1 and Q2 of 2025, we could be revisiting the 2022 lows.
What's going to be driving the prices lower, Scott? Is it a demand story or is it a supply story?
Well, it's a combination of demand and supply. We're seeing weakening demand in the near term. And in the medium term, looking into 2025, seeing lower orders. And at the same time, we're seeing material accumulate in warehouses. So at the immediate this year and next year, we're seeing a reduction in demand and an increase in supply. And hopefully in late 2025 and into the latter half of the decade, we see the inventory come down and the demand come back up, increasing our prices.
Talk a little bit more about that demand, Scott. There is the energy transition piece, of course, for copper, and then there's also the pure industrial command for copper as well, too, Dr. Copper.
Yeah, so I'm of the belief that we're in the early stages of the start of the millennial super cycle. So young people my age and a little bit older are beginning to reach our peak earning and peak consumption. And that demand is going to run for a decade, if not more. And I believe that will spread around the planet and increase the overall demand, and production will be able to meet the demand, but the initial boom of consumption will push those prices back up to the levels we've been seeing lately, if not higher.
How do you gauge what is happening in China, Scott, and its impact upon copper? I mean, China has been, it's been months and months of disappointing economic data that's been coming out of the country.
Yeah, so my family has a close relationship with China. My uncle has some factories in the steel industry there, and we watch it very closely. And right now, China's economy is not showing a lot of strength. There are young and medium-aged workers that are unemployed at levels the country hasn't seen in a long time. I also believe that the government subsidized building in the housing sector has slowed significantly, and that was one of the major driving areas in the market for copper consumption. In the long term, I don't see any major stimuli aiding or changing the economy in China other than a radical government intervention or something unseen.
Now, are the big traditional copper mines really slowing down? What's the outlook for them, Scott?
I don't really see the big traditional copper mines slowing down in any meaningful way. Many individual producers can be selective about grading in their ore pits, and that allows a lot of flexibility to take advantage of higher and lower prices. I believe that the major corporations are actually out assessing other ore bodies and geotechnical assessments and the financials at tier one assets around the planet. And they're considering how or when to acquire those assets to add to their book of primary production. It's becoming increasingly competitive to obtain tier one assets. And I anticipate large valuations with these offers, consistent with growing production and growing demand in the long term. Right now, for 2024, it looks like it will be a few percentage point increase in production, but nothing really into the double digits of production growth.
The copper bulls point out the incentive price for copper right now, and then we're really at too low an incentive price for making some bullish bets on copper, especially for some, how would you say, some new projects.
Mm-hmm. Yeah, in the near term, I think our copper price is fair. It could fall more to reflect the current state of the consumer market. Most people and most households across the planet are tight on cash. There's just not a lot of money and credit flowing around the world. In the medium term, I think the largest producers have mine costs of production per unit of outbound product that are below $3, if not lower. And they'll be just fine right now. Maybe they dial back production, but not likely. And in the long term, I do believe we'll see prices rise above $5. And like I said, the millennial consumption cycle is a really serious indicator of another commodity super cycle, similar to the baby boom cycle.
Now, the people that do believe in this super cycle, Scott, would be the big miners, and we've seen them make some really big copper bets. Talk about some of the M&A highlights that we've seen in 2024, Scott.
Yeah, so even in this week, we saw Codelco make a $500 million offer for a Teck Resources-owned mine in Chile, and that was for a 10% stake. So that's a very serious amount of money for only a 10% stake in that facility. And this is an example of what I mentioned before, the rush to tier one assets by major producers. They need to assure their investors that they have secure supply of raw material for the long-term future, not the near-term future as the majors. And in my opinion, we'll see more larger M&A offers to smaller producing facilities as tier one producers really try to build up their book of supply. In my research, I use mergers and acquisitions as a measure of the overall health of any particular industry sector. M&A has always been an early indicator of financial trouble on the balance sheet of the underlying company. And it only takes a few months for these companies that have tight cash turnover to really find themselves in a cash flow bind. And that presents an opportunity for the majors to come in and make offers to acquire high quality assets. In my research at the Colorado School of Mines, we did cash flow models for large and medium producers, and the intrinsic value of a particular deposit has multiple variables, and it will be really important for analysts at every major firm to really dig into the 43-101 reports and individual ore petrology and transportation constraints, governmental factors. They're going to have a lot of work ahead as they pick through these 300-page documents.
Why is building a big copper mine more challenging than building a gold mine, Scott?
Well, everyone loves gold. We can just say that. But copper mines are ultimately a much larger mine site, and there is a strong negative connotation within certain communities related to copper mining and tailings. Copper mines are more difficult to assess from a cash flow modeling standpoint, and accountants really get riled up on those numbers. And copper mines require significant infrastructure building in order to produce a concentrate in a product they can sell. And that gets investors and long-term liquidity providers a little concerned about what is going to be the payment return time frame and what is the net present value of that deposit. Additionally, gold is showing really strong near-term, medium-term, and long-term demand. The gold price chart has produced a beautiful textbook cup and handle formation. And from a regulatory standpoint, gold was reclassified as a tier one asset. So banks and governments will be buying large quantities of gold to backstop their books.
Is there anything happening on the technology side that could be meaningful to copper? The big trends that we see, Scott, would be AI, automation, and electrification.
Yeah, well, AI has been a big buzzword the last couple of years, and it is making its way into the mining industry. I feel that the big technology jump is happening in the tailings management sphere and in the closed circuit water management spheres. So from a tailings standpoint, engineers are working diligently to try to reduce the amount of runoff almost to zero from these facilities. And from a water management standpoint, the mining industry as a whole is making great strides towards 100% of the water used at the ore processing facilities being recycled and reused inside the facility. And these are just great ways to address and nullify some of the environmental concerns that have really been a challenge for permitting, construction, and production at copper mines. From a macroeconomic standpoint, copper is essential for the electrification of the planet. And I believe that as we lean into solar and wind to provide electricity, that will require a higher volume of copper in a more distributed and diversified landscape around the planet.
Scott, that goes back to your long-term demand forecast that we talked about at the start of the interview. It's just that you see this story about electrification and the investment in electrification kicking in, and that's what's going to be driving copper higher?
Yeah, I believe electrification and in many developing nations around the planet. I watch India very closely, Indonesia, as really Southeast Asia is where a lot of electrification is happening, and the electrification of Africa. These are multi-decade processes, and I do believe that we're making huge strides around this planet to electrify households.
Talk about some of the big milestones that you're watching in the copper sector over the next 12 months. I believe you did talk about some copper coming online.
Yeah, so there are big copper projects coming on, and permitting is moving forward, albeit slowly. But in the next 12 months, I'm really watching what's going on in the Treasury environment with the 2-year and 10-year spread as we lead path. We're on a path towards normalcy in the interest rate market, and that does indicate a near-term and medium-term recession. The SOM rule is also signaling a short-term recession. And really, when I look at Dr. Copper and the way copper and the equities markets are related, there's generally a 3-month lead in the copper market before it affects the equities markets. And I think we're beginning to see some of the weakness that in the equities that copper showed us 3 or so months ago. And this is indicative of financial turmoil on the horizon. And from an analysis standpoint, I do believe that we can correlate the event, the Black Monday 2.0 we had last month, and we can line that up with some of the big price drops by magnitude in the copper market. I'll be watching very closely the futures market and any rapid price changes and volatility. I'll also be watching treatment charges and refinement charges. And in the latter half of the 12 months, so into next year, I'm anticipating and looking for announcements of delays at the Adani plant in India and the Freeport plant in Indonesia. I believe that if we see a fall or a sharp decline in the price of copper, that those plants will be delayed and they'll either greatly reduce the construction or just halt construction altogether until the price improves. And in the longest term sense, I'm going to be watching for the retirement and early retirement of long-standing senior experts and leaders at mining companies across all commodities. Those are the folks that we look up to, and they have the most experience, the best information. And when you see people retiring, maybe earlier than you might think, that's always an indication that they're ready to hang up their hat and call it.
Scott, thanks for speaking with Kitco.
Yeah, it was wonderful to be on today. Thank you so much.
My name is Michael McRae. You're watching Kitco Mining.